Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, December the 26th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we're talking about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. What I'm here to do is teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. I hope everybody had a great holiday, but back in the saddle again, looking at the markets, trying to claw back some of those losses we've seen the last couple of months. I don't know if that's really going to happen anytime soon because the economic data points that we've been getting lately are not great in the form of Richmond manufacturing. It's not one of the most popular data points, but these Fed manufacturing indexes, I think, are very important, giving us an indication as the overall strength of the economy here in the United States. And Richmond manufacturing index came in at -8, was expected to be a +16. So one of the worst data points on these Fed manufacturing that we've seen, but they've all come in lower than expected, showing pretty much not a great economy going forward, or not a great outlook. That being said, the stock market is ahead of those economic data points. Globally, we're also seeing a bit of a slowdown going on there as well. All right, so overall markets not looking too great. Fed increasing interest rates going forward, not going to be a great thing for the economy, because when you raise interest rate, you kind of try to slow down that economy. Well, the economy is starting to slow a little bit on its own. I don't think it needs any more catalyst. All right. But anyway, having said that, we've got crude oil moving higher by about $2.50, about halfway back of yesterday's sell-off. A little bit more room to the upside would give us a nice big engulfing candle, make that look like a nice little bottom, especially if we get confirmation tomorrow. As of right now, I haven't added anything, but I am ready to start adding some long deltas across the board pretty much. As you guys know, I covered mine about a week ago, right before the last big sell-off. I'm starting to look at an opportunity here with really high implied volatility to be able to start adding some positions to my portfolio. So crude oil might be one of those where I'm playing to the upside. As you can see, it's trying to make the market come back. We've got gold moving higher. I'm not going to play into gold. Gold's still going to be a flight to safety for some of those that are not convinced that this is a bottom in the equities. They're going to still be placing money here. That's what's giving a little bit of lift, and it could even get up into the 1300s if we get this big settlement above the Fibonacci here, the 61 Fibonacci level there. So a big settlement there would be a push to try and test that 13 handle. Then on to the bonds. They're giving up a little bit of ground now that we're starting to see the equities start to give a little bit of pace to the upside. We'll look at the VIX coming off just a little bit, but up in that 30 handles. On the 30 handle there on Monday, we got a nice big spike there with the big sell-off. Lack of volume going on for the most part, but a lot of retailers, I think, were trying to add some protection to their portfolio heading into the holiday weekend. And then we've got the Dow Jones Industrial Average up about 100 points right now. You know, it's come down and tested this 78 Fibonacci, or this 78 Fibonacci level here, and bounced up and away. Doesn't really look great here, but earlier on the NASDAQ was looking a little bit better as a bit of a bottom here. So a confirmation to the upside tomorrow would be good. I think that we're about due for at least some type of dead cat bounce, which would be a move to the upside, then resume to the downside would be that dead cat bounce, a little bit of a bounce and then resume to the downside. That is in the cards. I think we're going to get a bit more of a bounce up into the value area where we are starting to trade up and around here. We got the E-mini S&Ps. They're trying to rally as well, up about 26 points. Again, this looks like it's making a nice little bottom down here, especially after this big sell-off. You'd like to see some kind of support down here, which is what I think that we're seeing right now. Settlement towards the bottom of the day. Again, you know, those late day sell-offs do not really get me very excited about a change in trend. So a settlement to the upside would be good. I don't want to see any more of this late day rally or late day sell-offs like we've been seeing, where the big volume comes in late in the day selling. It's not very good going forward. But as you can see, the E-mini S&P is trying to test the 50 Fibonacci. That's on a 3-year Fibonacci there. And we look at the day chart. Overnight inventory started getting long. A little bit of an attempt to flush those guys out, get out those weak hands. But now we're starting to see a bit of a move to the upside. The data, not so great, but the technical analysis on this is making it look like it's ready to set up for the upside. And that's about it, other than tomorrow's webinar is going to be on the poor man's covered call, especially if you think that this is an opportunity where we're finding a bottom. We got really high implied volatility, so we'll be able to sell some of those, some of that ball in the front months, take advantage of that skew that we're seeing in volatility going out the curve. And I'll show you how to set that up tomorrow in the webinar. So check out protraderstrategies.com and sign up for the poor man's covered call, because if you aren't getting involved in this strategy, you're missing out on a lot of opportunity. And I'll go through each and every one of those steps as to how to build this up and how to increase your probabilities of success with this strategy. So go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.